At its height, the United States held immense power, militarily, economically, and politically. It controlled the world's reserve currency, had a military presence on almost every continent, and led the charge in global economic institutions. Yet, despite its dominance, the signs of decline are becoming unmistakable. The U.S. is rapidly following the same pattern that has led to the fall of some of history's most powerful empires: Rome, Spain, and Britain. The question we need to ask today is not whether the U.S. will continue to reign supreme, but rather, how much longer can it maintain this position? And more importantly, will America suffer the same fate as these fallen empires? When we look back at the rise and fall of empires throughout history, there's a clear pattern that emerges. It's not about military defeat or foreign conquest. It's about internal economic collapse, a breakdown caused by unsustainable financial policies, currency devaluation, and unchecked spending. These forces, over time, lead to a loss of power and influence both at home and abroad. This video will explore the striking similarities between the current state of the U.S. and the decline of ancient empires like Rome, Spain, and Britain. It will dissect how these empires collapsed, why the U.S. might be on the same trajectory, and what that means for the future of America. As we dive deeper into this pattern, it's essential to understand that history is repeating itself, and this time, the stakes are higher than ever before. The story of every great empire begins with ambition. At their peak, these empires control vast territories, influence global affairs, and dominate the economies of their time. The driving force behind any empire's expansion is a combination of military might, economic strength, and political influence. However, what often gets overlooked is that behind this outward success, empires are built on unsustainable practices, principally excessive spending, inflation, and debt. For example, Rome, one of the most powerful empires in history, was built on a foundation of military conquest. The empire expanded its borders across Europe, North Africa, and the Middle East, requiring an ever-growing military and infrastructure to maintain control. Over time, this expansion became unsustainable. The Roman government began to devalue its currency, reducing the amount of precious metal in its coins. This debasement of currency led to inflation and loss of confidence in the Roman economy, triggering a downward spiral that ultimately contributed to the empire's collapse. Similarly, the Spanish Empire enjoyed wealth beyond imagination during its golden age, largely thanks to the treasures of the Americas. However, Spain's reckless spending on wars, palaces, and luxuries eventually left it financially bankrupt. The constant influx of silver from the New World only inflated the economy and led to repeated defaults. Spain was not producing anything of value. It was simply spending the wealth it extracted from its colonies. Eventually, this led to an economic collapse and the dissolution of its empire. Lastly, the British Empire rose to global dominance by controlling vast territories and trade routes across the globe. The British pound sterling became the world's reserve currency, and Britain reigned as the economic powerhouse for over 2 centuries. However, after the devastation of World War I and World War II, Britain's economic position began to deteriorate. The cost of war led to massive national debt and, like the other empires before it, the British government resorted to currency devaluation and inflation. By the time World War II ended, Britain had lost its grip on its colonies, and the British Empire slowly collapsed under the weight of its debts. All 3 empires, Rome, Spain, and Britain, collapsed due to the same internal economic forces: military overextension, unsustainable spending, currency debasement, and ultimately, inflation. The U.S., too, is now facing these same economic challenges, and unless something drastic changes, it could follow the same fate. Let's take a closer look at Rome, the epitome of ancient power and might.
At its peak, Rome controlled a vast swath of the known world, spanning 3 continents and housing over 60 million people. The Roman Empire was a military powerhouse with unmatched infrastructure and wealth. But despite all this, Rome collapsed, and it collapsed for one reason: currency devaluation. The Roman currency, the denarius, was originally a coin made of pure silver. For centuries, it maintained its value and was trusted across the empire. But as the empire expanded, the costs of maintaining such an enormous territory grew exponentially. Rome's rulers began to debase the currency to meet their growing financial needs. They started by reducing the silver content in the denarius, essentially inflating the money supply without any real increase in wealth. At first, the devaluation wasn't noticeable, but over time, the purchasing power of the denarius collapsed. By the time of Emperor Caracalla in 211 AD, the denarius was only made up of 50% silver. By 265 AD, it was reduced to just 5% silver, with the rest of the coin made up of base metals. For the soldiers of Rome, this meant they were being paid with currency that was losing its value by the day. Prices soared and inflation spiraled out of control. The collapse of Rome's currency was a self-inflicted wound. The empire didn't fall due to external invasions or attacks. Instead, the breakdown of its economy was caused by poor fiscal policies, which included the inflationary devaluation of its currency and the overextension of military resources. This is eerily similar to what we're seeing today in the United States. Just as Rome's currency lost trust, the US dollar is facing a crisis of confidence. The US is printing more money than ever before to finance its $37 trillion debt, and the value of the dollar continues to erode. Just as Rome's soldiers demanded to be paid in real value, gold or goods, Americans may soon face the same crisis, where their money no longer holds the purchasing power it once did. Let's move forward to the Spanish Empire, another empire that fell despite having massive wealth. Spain's downfall didn't come from a lack of resources, it came from mismanagement. In the 16th century, Spain struck gold and silver in the Americas. For nearly a century, the Spanish treasury was flooded with precious metals from its colonies. At the height of its power, Spain controlled vast territories, including much of the Americas, and its currency, the Spanish dollar, became the first global reserve currency. But the paradox of wealth soon became clear. More money doesn't make you richer if everyone has more money. The constant influx of silver and gold into Spain led to massive inflation. The value of silver plummeted and prices surged across Europe. Spain's economy was flooded with cheap money that was only contributing to the destruction of its monetary system. Meanwhile, the Spanish monarchy continued its extravagant spending habits, financing wars and luxurious lifestyles that further drained the empire's resources. By the late 1500s, Spain's kings had inherited massive debts. King Philip II, the most famous of the Spanish Habsburgs, found himself in a dire financial situation despite Spain's massive wealth. Instead of curbing spending or cutting military campaigns, Philip continued borrowing money and financing costly wars. Eventually, Spain declared bankruptcy 4 times in less than 40 years, and its creditors lost confidence in the Spanish crown. Like Rome, Spain's downfall was due to excessive borrowing and inflation driven by the overuse of its gold reserves. In the end, Spain couldn't manage its wealth, and despite holding vast riches, its empire dissolved under the weight of unsustainable financial practices. This should sound familiar. The U.S. is borrowing excessively and running massive deficits to fund its global military presence and internal programs. The lessons from Spain's fall are clear. An empire can hold vast wealth for a time, but if it doesn't manage its finances carefully, debt, inflation, and economic collapse are inevitable. Now let's look at Britain, the empire that once ruled a quarter of the world's population and land. At its peak, Britain controlled vast colonies, major trade routes, and boasted the British pound sterling as the world's reserve currency. The British economy was built on the gold standard, and the pound was backed by gold, making it a trusted and stable currency. However, two world wars in the 20th century drained Britain's finances and undermined its global standing. By the end of World War II, Britain was in massive debt, and its global influence was in decline. The British government had no choice but to print more money to fund the war effort, which caused inflation and further devalued the pound. In 1944, during the Bretton Woods Conference, the British pound was officially replaced as the world's primary reserve currency by the US dollar. Britain had lost its economic footing, and in the post-war years, its financial troubles deepened. By 1949, the British government was forced to devalue the pound by 30%, and by 1967, it was devalued again. Britain's decline wasn't due to military defeat or loss of territory. It was the result of unsustainable economic policies, excessive spending, and the devaluation of its currency. By the time the British Empire dissolved, the pound had lost its status as the global reserve currency, and Britain's economic power had collapsed. Today, we are seeing similar signs of decline in the US dollar. The dollar was once backed by gold, just as the British pound was, but in 1971, the US abandoned the gold standard. The US dollar, once the world's most trusted reserve currency, is now at risk of losing its global dominance. BRICS nations, Brazil, Russia, India, China, and South Africa, are increasingly seeking alternatives to the dollar, signaling that the U.S. may be on the verge of losing its position as the world's reserve currency, just as Britain did. The U.S. has long been the world's economic powerhouse, controlling vast amounts of wealth and having a dominant position in global trade. However, that power is now under serious strain. America's national debt has skyrocketed to an unfathomable $37 trillion, and the interest payments alone are nearing $1 trillion per year. This is more than what the government spends on defense, Medicare, or any other single program. The U.S. government is now spending more on servicing its debt than on some of the most important programs that sustain its economy and social welfare. The question is, how did it get to this point? And more importantly, can the U.S. continue this path without facing consequences? If we look at historical empires, we see that this kind of debt spiral is a common precursor to their eventual collapse. It's not just about having debt, it's about having debt that is unsustainable. For instance, both Rome and Britain faced enormous debts in their declining years, and instead of confronting the issue, they opted to inflate their currencies to make the debt seem more manageable. This approach only worked for a time before economic collapse set in. Similarly, the U.S. has reached a point where its debt can no longer be ignored. The country's debt-to-GDP ratio is now higher than it has ever been in history, with interest rates rising as the Federal Reserve continues to raise the cost of borrowing. The U.S. can no longer rely on the unlimited printing press it once had, as inflation becomes a serious concern. But what makes this situation even more precarious is the dollar's role as the world's reserve currency. The U.S. dollar has been the global standard for decades, but this dominance is under threat. As countries around the world move away from the dollar in favor of alternatives,
Currencies like the Chinese yuan or cryptocurrencies, the U.S. risks losing its economic power. America is now faced with a crisis of confidence, both at home and abroad. Can it maintain its position as the global financial leader while carrying this immense debt? Or will the U.S. eventually face a day of reckoning, where the rest of the world stops trusting the dollar as the world's primary currency? A key factor in the downfall of historical empires has always been military overextension. The idea that empires stretch themselves too thin in an attempt to maintain control over vast territories. The Roman Empire is a prime example, as its constant military campaigns drained its coffers and overstretched its resources. Similarly, the British Empire suffered the same fate, particularly in the years leading up to World War II, where the costs of maintaining its colonies became unsustainable. So, what about the United States? The U.S. is now the most militarily engaged nation in the world, with bases and personnel spread across the globe.
The U.S. military presence spans continents, from Europe to the Middle East, from Asia to Africa, and it is actively involved in multiple conflicts around the world. But maintaining this military presence comes with a hefty price tag. According to the U.S. Department of Defense, the total cost of military expenditures, including personnel, equipment, and operations, amounts to over $700 billion per year, which constitutes nearly 15% of the entire federal budget. This does not include the costs of veterans' benefits or foreign aid related to military spending. Much like Rome and Britain, the U.S. has invested heavily in its military to maintain global dominance, but this has come at a steep cost. Not only has this resulted in massive spending, but it has also led to the erosion of domestic priorities. Money that could be used to fund domestic infrastructure, healthcare, and education is being siphoned off into wars that, while often justified under the banner of national security, have questionable long-term benefits. One of the most prominent examples of this overextension is the War on Terror, which began in the early 2000s and has led to ongoing conflicts in Afghanistan, Iraq, and other parts of the Middle East. The costs of these wars, both human and financial, have drained U.S. resources, contributing to the growing national debt. More recently, the military aid to Ukraine in its conflict with Russia has raised new questions about the sustainability of U.S. military spending in an increasingly complex and multipolar world. At the core of this issue is the unsustainable nature of military spending. When empires overextend their military power, they often find themselves stretched too thin to maintain control, and the cost of their defense efforts begins to outweigh the returns. In the case of the U.S., the question now is whether it will be able to maintain its global military presence, especially when its debt continues to balloon.
As we've seen throughout history, one of the most common tactics used by empires in decline is currency debasement, the practice of reducing the value of the currency in circulation by adding less precious metal or printing more money. This is exactly what Rome did when it reduced the amount of silver in its coins. This not only led to inflation, but it also caused widespread loss of trust in the currency. The U.S. dollar is facing a similar crisis. Over the past few decades, the U.S. Federal Reserve has engaged in quantitative easing, a form of money printing, in order to stimulate the economy. This has led to a dramatic increase in the money supply, but without a corresponding increase in goods and services to back it up. This, in turn, has contributed to inflation, which is now at decades-high levels. The U.S. government's debt has risen so much that it must constantly print more money to cover interest payments. This printing, in turn, devalues the dollar, the very same thing that happened to the Roman denarius centuries ago. The result is that the U.S. is now facing the prospect of hyperinflation, where the value of the dollar plummets rapidly, causing the cost of living to soar. A striking example of this phenomenon occurred in 2020, when the Federal Reserve printed over $3 trillion to stimulate the economy in response to the COVID-19 pandemic. While these measures were intended for short-term relief, the long-term consequences are becoming clear. Prices are rising across the board, from food to fuel to housing, while the dollar's purchasing power continues to shrink. As we've seen throughout history, currency debasement erodes trust in a nation's financial system, and the people suffer the most. When the value of a currency collapses, people's savings and pensions lose value, and wages no longer stretch as far. This leads to a breakdown in social trust, economic instability, and ultimately, the collapse of the empire itself. For decades, the U.S. dollar has been the world's reserve currency, meaning that it is the preferred currency for global trade and held in foreign reserves by central banks around the world. This has given the U.S. a unique advantage. It has been able to borrow and spend without facing the same kind of financial constraints that other nations would face if they had high levels of debt. However, the U.S. dollar's dominance is now being challenged. In recent years, countries like China, Russia, and members of the BRICS alliance, Brazil, Russia, India, China, and South Africa, have been actively seeking alternatives to the U.S. dollar. For example, China has been promoting the yuan as a potential alternative reserve currency.
while Russia has moved to de-dollarize its economy, shifting its foreign trade to currencies like the euro and yuan. One of the most significant developments in the de-dollarization movement is the rise of cryptocurrencies. As digital currencies like Bitcoin gain popularity, they offer a decentralized
Alternative to traditional government-backed currencies. Countries like El Salvador have even made Bitcoin legal tender, signaling a shift away from the US dollar in some parts of the world. If the US dollar loses its position as the world's reserve currency, it will have a devastating effect on the American economy. The US will no longer be able to rely on foreign demand for its currency to finance its debt. The value of the dollar will likely plummet, leading to inflation and increased borrowing costs for the US government. History has shown us that once an empire's currency is no longer trusted, the empire's economic foundation begins to crumble. As we see the US dollar's dominance eroded by alternative currencies, it's important to understand that the end of dollar hegemony could be the beginning of America's economic downfall. In the later stages of empire decline, one of the most telling signs is the increasing economic inequality. As wealth becomes concentrated in the hands of a few, the majority of the population is left behind, creating a two-tiered society. This inequality often leads to social unrest and a loss of public confidence in the government. In the case of Rome, the disparity between the rich and the poor became so severe that it contributed to the destabilization of the empire. The wealth of the elite grew exponentially, while the common people were burdened with high taxes, food shortages, and a lack of opportunity. Similarly, in Spain and Britain, the wealthy elite continued to prosper while the working classes were left to suffer the consequences of economic mismanagement. The same trend is evident today in the United States. The wealth gap between the rich and the poor is at an all-time high, with the top 1% of earners controlling more wealth than the bottom 90% combined. Meanwhile, wages for the average American have stagnated, and the cost of living continues to rise. The growing inequality in the U.S. is unsustainable. As more and more wealth is concentrated in the hands of the elite, it becomes harder for the middle class to thrive. This leads to social instability, political unrest, and a loss of national cohesion. Eventually, when the disparity becomes too large, the empire starts to fracture from within. As we've seen with the fall of Rome, Spain, and Britain, internal corruption plays a central role in the collapse of empires. Corruption, both political and economic, weakens the internal structures of a nation, allowing external pressures to exacerbate pre-existing vulnerabilities. When the very leaders of an empire are driven by self-interest and greed, the downfall becomes inevitable. This has always been one of the key indicators of an empire in decline. Let's look at Rome again. By the time of its collapse, the Roman political system was rife with corruption. The senators and emperors, once dedicated to the welfare of the empire, became
more concerned with their personal wealth and power. Emperors bribed the military to ensure loyalty, and corruption permeated the bureaucratic system, which led to inefficiency, waste, and mismanagement. The economy, already suffering from overexpansion and military overstretch, was further crippled by a lack of effective leadership. Fast forward to the Spanish Empire. After years of wealth flooding in from the New World, the Spanish monarchy became overly dependent on its treasure-rich colonies. However, rather than reinvesting in the empire's infrastructure or diversifying its economy, the Spanish elite indulged in luxury while common citizens suffered. Corruption spread through the ranks of the nobility, and the monarchy's constant wars further drained the empire's resources. The Spanish government failed to address its internal weaknesses, which ultimately led to its economic collapse. The same pattern is evident in the decline of Britain. In the 19th century, British society was marked by an extraordinary gap between the elite and the working class. The political system, which had once been a model of democracy, was increasingly influenced by wealthy industrialists and colonial interests. Bribery, lobbying, and patronage became endemic in British politics. The ruling elite, while enjoying the spoils of empire, ignored the needs of the broader population, leading to an economic and social crisis that contributed to the fall of the British Empire. The parallels to modern-day America are staggering. Political corruption is rampant, with lobbying firms and special interest groups holding far too much influence over U.S. policy. The system has become one where politicians are more focused on their personal gains and power than on serving the interests of the public. The wealthy elite use their influence to shape laws that benefit them, while the average American struggles to make ends meet. This dynamic leads to misallocation of resources and a growing disconnect between the government and the people. Corporate interests hold more sway than ever before. The influence of companies like Big Pharma, tech giants, and Wall Street banks has reached unprecedented levels. The U.S. political system, which was once built to represent the people, has now become a tool for the wealthy and powerful to entrench their interests. This corruption, while perhaps not as visible as in the past, has created a society that is increasingly disconnected from its democratic ideals. As the wealth gap continues to grow, the American political system becomes more divisive and inefficient. What was once a model for the world is now showing signs of internal rot. Just as Rome, Spain, and Britain experienced collapse due to internal decay, the U.S. faces the same fate unless it addresses its corruption problem. The U.S. dollar has been the world's reserve currency for nearly 80 years. It is used in global trade, held by central banks as reserves, and is considered a safe haven for investors.
Worldwide. However, in recent years, the dollar's dominance has been eroded. Like the Roman denarius and the British pound, the U.S. dollar faces devaluation and loss of confidence. The post-World War II Bretton Woods system gave the dollar its status as the global reserve currency, backed by gold. But in 1971, President Richard Nixon ended the dollar's convertibility into gold, effectively making the dollar a fiat currency. Since then, the dollar's value has been solely based on trust that the U.S. government would maintain its economic stability and honor its debts. However, the global financial system is changing. Many countries, including China, Russia, and even members of the European Union, are increasingly moving away from the U.S. dollar. The rise of alternative currencies, like the Chinese yuan and digital currencies, represents a direct challenge to the dollar's global dominance. In fact, more and more countries are conducting trade in their own currencies, bypassing the dollar entirely. China, in particular, is aggressively promoting the yuan as a reserve currency, while Russia is seeking alternatives to dollar-based trade. The BRICS countries, Brazil, Russia, India, China, and South Africa, are also discussing the creation of a new reserve currency that would reduce reliance on the dollar. This movement is a direct reflection of the growing lack of trust in the dollar's long-term stability. Furthermore, the U.S. government's massive national debt has made many foreign investors question whether the U.S. can continue to maintain the dollar's value. The U.S. has relied on debt for decades, but it's becoming increasingly clear that this strategy is not sustainable. Countries that once held large dollar reserves are now starting to diversify into other assets, including gold, Bitcoin, and other commodities. If the U.S. dollar loses its status as the world's reserve currency, the consequences for the U.S. economy would be catastrophic. The U.S. would no longer have the ability to borrow at low interest rates, and foreign countries would likely demand repayment in other currencies, causing a massive devaluation of the dollar. This loss of trust would lead to hyperinflation, skyrocketing prices, and a collapse in living standards for ordinary Americans. Just as the Roman Empire and British Empire experienced a loss of currency trust, the U.S. is headed in the same direction. The dollar's decline is a matter of if, but when. Currency collapse is a hallmark of empires in decline. Historically, when an empire's currency loses its value, the entire economy follows suit. Rome's collapse was precipitated by the loss of trust in its denarius, which led to rampant inflation. Similarly, Spain's silver-based economy collapsed under the weight of inflation caused by the vast amounts of precious metals flooding the market. Britain saw the pound sterling lose its place as the world's primary reserve currency as its debt grew and inflation surged.
In the U.S., the inevitable collapse of the dollar is becoming more apparent. The U.S. has been printing money at unprecedented rates, with the Federal Reserve injecting trillions of dollars into the economy over the past decade. While this has temporarily helped to stave off a complete economic collapse, it has also led to massive inflation, rising interest rates, and a weakened dollar. The global economy is beginning to shift away from the US dollar. As more countries de-dollarize and as alternatives like Bitcoin and other digital currencies gain in popularity, the US is losing control over its currency's value. The writing is on the wall. Unless the U.S. takes drastic action to restore confidence in its financial system, the dollar will eventually collapse, taking the U.S. economy down with it. The collapse of the dollar would have devastating consequences for everyday Americans. Salaries and savings would lose their value almost overnight, leading to poverty for millions. The U.S. government would no longer be able to print money to pay off its debts, and inflation would spiral out of control. The wealth gap would widen even further, with the rich profiting from their investments in hard assets like gold and Bitcoin, while the poor struggled to survive. What's at stake here is not just the financial future of the U.S., but its very identity as a global superpower. If the U.S. continues down this path, it risks becoming just another failed empire in history, with its collapse being a cautionary tale for future generations. The impact of the U.S. losing its global economic dominance would be felt across the world. Many countries rely on the stability of the U.S. dollar, and if that stability disappears, global markets will be thrown into chaos. The rise of alternative currencies will create new economic powers, but it will also lead to global instability as countries scramble to find a new currency to fill the void. For America, the collapse of the dollar will mean lower standards of living, loss of global influence, and an economic system that no longer works for the average citizen. The U.S. will face a future where its debt can no longer be ignored, and its empire will crumble under the weight of its own financial mismanagement. The big question is, will the U.S. be able to change course in time to avoid this fate, or will it succumb to the same pattern that doomed previous empires? The collapse of empires is a story as old as history itself. From Rome to Spain to Britain, the patterns are clear. Today, we're watching the United States walk the same path. The question is whether it can learn from history, or whether it's already too late. Now is the time for America to address its growing debt, cut unnecessary spending, and restore trust in its currency. The signs of decline are all around us, but they can still be reversed. The question is, will we take action before it's too late?